Question number 10. Now, to go with, the following balances appeared in the books of Paradise Limited, unlisted company other than AFI. Therefore, so since it is unlisted, that is indication of DRR. DRR at 10% of face value outstanding is required. And also DRRI at 15% required. So therefore, let's calculate now. So now the following balances as on 1/4/2001. So 12% debentures are 7,50,000. Balance in DRI. So therefore, face value 15 lakh. Therefore, 7,50,000 is the face value into 10%, which amounts to 75,000 I required. But how much is balance is there? Only 25,000. So therefore, additional 50,000 I supposed to take from P&L. So this is additional. So first, before I go for redemption, I supposed to create this 50,000. Then DRRI investment is 1,12,500 represented 10%. Interest is there. It is rupees. It is not rupees. Rupees is not there here. 1,125 secured bonds of government of India, rupees 100 each. It is numbers. So therefore, calculate 7.5 lakh into 15%. How much it amounts to? 7.5 lakh into 15%. So it is 1,12,500. So it is already there. So therefore, sufficient is there. It is 1,12,500. Therefore, it is already created to that extent. Therefore, very good. Next, my dear friends. Annual contribution to DRR was made on 31st March every year. Very nice. On 31st March 2012, bank balance was 7,50,000. So that means this is 1/4/2001. So this is next year end, 31st March 2002. 31st March 2002, 7,50,000 bank balance is there before receipt of interest. Underline the word before receipt of interest. So that means on 1,12,000 into 10%. 10%. If I receive 11,250, interest will come. Correct? That I have to add to in bank balance. The investment were realized at par. So therefore, 1,12,500 for redemption of debentures at a premium 10%. Underline. Premium 10%. So therefore, at what amount I am going to give? 7,50,000 into 10%. Premium is 75,000. That's all, my friends. You are required to prepare the following accounts for the year ended 31st March 2002. Debentures account, DRR account, DRRI, debenture redemption reserve investment account, bank account, and debenture holders account. That's all. It's a simple problem. So complete solve. Yeah. So question number 11. Question number 10. Question number 10, page number 68. Solution. Now, to start with, in the books of Paradise Limited, in the books of Paradise Limited. Books of Paradise Limited. So first ledger account, what we supposed to open is debentures account. Let us open. Percent debentures account. 12% debentures account. So let us open. So this for some 5 lines. Debentures account is for just for 4-5 lines. Only one transaction is there, just a final cancellation. That's it. Then second account is DRR account. DRR account. Since they have given in a short form, I'm using that word. Otherwise, I can't. DRR account for some 5 lines, some 5-6 lines. So then number third, which account we supposed to open? DRRI. So DRR investment account. DRR investment account. So then bank account number 4, bank account. Then number 5, debenture holders account. Debenture holders account. That's it. If any required, we have to go for under this working note. So immediately, once the ledger accounts are open, immediately we have to update the opening balances. So debentures credit balance. So by balance brought down. By balance brought down. Debentures are 7,50,000. DRR by balance brought down. By balance brought down. So these all are 1401, 1401, 2001. By balance brought down, 25,000 is there. So additional how much is that? That let us calculate. Debenture redemption reserve investment, so 1401. So to balance brought down, 1,12,500. So bank balance, did they give bank balance? Bank balance 7,50,000, yes. So 1401 to balance brought down 7,50,000. 7,50,000. But this is not, no, this is bank balance at the end. Bank balance, make it as 31st March, my dear friends. It is 31st March 02. Debenture holders as of now, nothing. Yeah, that's all. So now here DRI. So I have ensured that it is already complied. Therefore, no DRR additionally we are supposed to create. But so there is a shortfall in DRR. So therefore, same day. So by P&L account. By P&L account. By P&L account. So by P&L account, so which is my dear friends, 7,50,000 into 10% minus 25,000 opening balance. So what you have required is 50,000 you're supposed to create additionally. 50,000 you're supposed to create additionally. So that is a one case from P&L. Next, so this is one case before we go for redemption. So now compliance is ready. Now we can start redemption. So first we have to go for a sale of DRI. So they said it is redeemed at, it has been sold at par. But at the time of sale, so we have to receive the interest. We have to receive the interest. Moreover, we are selling on when 31st December. So 31st March 2002. Therefore, full year interest we are supposed to receive. By bank, this is 31st March 02. So by bank, so it is a sale at par, therefore 1,12,500. In bank, same 31st March 02. So to DRR investment, sale price 1,12,500 plus to interest, it is 1,12,500 into 10%, which amounts to 11,250. 11,250. So this is sale of investment is over. So now we have to go for redemption due entry. So redemption due entry, it is a redeemed at 10% premium. 10% premium. So therefore, here debentures face value account debit, premium on redemption account debit to debenture holders account including premium. So therefore, so here 31st March 02 to debenture holders account face value 7,50,000. So that's all, this account is closed. Then, so premium on redemption, have you opened? No. So here credit side, by 12% debentures account. So to the extent of face value 7,50,000. This is on 31st March 02. So by premium on redemption, which is 7,50,000 into 10%, which amounts to 75,000. Therefore, total 8,25,000. Yeah. So pre-mod redemption they have not asked. Therefore, I have not opened. So next entry is payment entry. So entry is debenture holders account debit. So 31st March 02 to bank 8,25,000. So here 8,25,000 is closed. 8,25,000 is closed. So this side credit side by same 31st March 02. So by debenture holders account, debenture holders account, which is 8,25,000. 8,25,000 debenture holders is closed. So that's it. So now DRI is already closed. So now DRR and debentures is already closed. Now DRR, whatever is there, this has to be transferred to 31st March 02 to general reserve. General reserve 75,000. Is just a by balance carried down. By balance carried down. So which amounts to I think 48,750. So balancing figure 48,750. 48,750. Yeah. So that's it. That's it. Sir, what about interest on debentures? So they have not asked that account, no? They have not at all asked. Did we ignore because of information isn't given? Yes. Yes. Otherwise, I would have. It's mandatory. So in this problem, they have asked only debentures account, DRR investment and bank. So bank account also, Sam, you can raise, sir, bank account, debenture interest will come, no. Yeah, but they have given the word balance as on 31st March 2002. Bank balance just before debenture interest. Just before, that is a income from investment. That's all they have given. Got it? Receipt before receipt of interest. Receipt means income. So therefore, so it is assumed that interest would have been paid off from the bank. Thereafter, balance has been given. Yeah. Come to question number 11. Question number 11. So this as the here all this problem, my dear friends, till now what we have discussed in all 4 problems, we have discussed ledger accounts. We have discussed or we have shown ledger accounts because entry we already studied in a theory. So in this problem, they asked journal entry and using that directly balance sheet they have asked. Directly revised balance sheet after redemption, revised balance sheet they have asked. So therefore, please concentrate and using entry, then directly we will go for balance sheet. To start with, the summarized balance sheet of B Company Limited, unlisted company other than AFI. Therefore, DRR at 10% is required. DRR at 10% is required. On balance sheet as on 31st March 2001 as under. Now, share capital is authorized, therefore not required. It's a double underline. Now, paid up share capital is there. 2 lakh is the paid up share capital. Profit and loss account is there. So, but our key concept is 12% debentures for 1,20,000. This is what our chapter. This is what actually our chapter, because redemption of debentures we are in. So, therefore, debentures face value we are supposed to calculate. So, now here, look out, debentures are given. Then freehold property 1,15,000 is there, stock is there, trade receivable, cash, bank. Correct? I don't go further next problem. Just here itself I will stop and I will take the decision. Correct? Now look out, this is unlisted company other than AFI. Already debentures, if it is exist in a balance sheet, means DRR 10% they are supposed to create, as well as as well as DRRI at 15% they're supposed to create. This is what first, before I go for redemption, whether whatever I do before redemption, I have to do this two entry, then only I have to go for redemption. Correct? So except about other transactions, when I go for touching the redemption, before that I have to ensure that these two things has been complied. First I will pass this two entry, then only redemption will start. At the end again anyway I am going to close this. So now we are in 31st March 2001. Now my dear friends, keep in mind whenever I touch redemption, the two entries first I have to pass. Now, at the annual general meeting, it was resolved. That means decided that to give existing shareholders at the option to purchase 110 rupee, that's a face value share, at 15 rupee. That is what issue price. Issue price for every 4 shares held prior to the bonus distribution. This option was taken by all the shareholders. That means how many shares are there? 20,000 shares into 1 by 4. Therefore, 5,000 shares into 15 rupee. That means this is 75,000 you will get. Out of that 10 rupee and 5 rupee. That is 50,000 is face value and 25,000 is securities premium. 25,000 is securities premium. Got it? Out of this 15, 10 and 5. 10 rupees is the face value, 15 rupees is the issue price, therefore 5 rupees is a premium. So this is nothing but, my difference. It is like rights issue. It is like rights issue or fresh issue to the existing shareholders. It is rights issue. So this is what first event. Thereafter, to issue bonus shares for every 5 shares held. So therefore, here already look out. It is a prior to bonus issue. Therefore, before bonus issue, rights issue was made. That means on the date of rights issue, it is 25,000 shares are there into 1 by 5, every 5. So therefore, here also again I am going to give 5,000 shares into, since it is a bonus shares at face value, therefore this bonus issue also 50,000. Bonus issue also 50,000 and number of shares is 5,000. So here also 5,000 plus 5,000, therefore 30,000 shares are there. Just imagine. Now, for the purpose of bonus shares, my dear friends, I can use capital profit or revenue profit, but it should be cash profit. Therefore, first I'm going to use, look out in a balance sheet, capital profits which is there, only P&L is there, correct? But before bonus issue, I had a rights issue. Out of that, I generated 25,000 as a securities premium. Correct? Which is a capital profit. Therefore, securities premium is a free reserve for the purpose of bonus issue. I can take it. So therefore, first 25,000 I will use it. Balance 25 I am going to use it from P&L. So therefore, out of this 50,000, how I am going to use? So 25,000 from securities premium and 25,000 from P&L. That's how I am going to use this case. That's how I am going to use this. Next. To repay the debentures at a premium 3% underline. 3% means 1,20,000 into 3%, which is 3,600. 3,600 is premium. This I have to adjust in P&L finally. So therefore, in total, I'm going to pay 1,23,600. Correct? But before that, you have to ensure that a two entry. Whenever you look out, till I go for touching the redemption of debentures, I don't want to create that to DRR, DRI. This is not required. Just I will go for existing shareholders. I will go for rights issue and bonus issue. Normally, I will do it. Whenever I go for redemption of debenture, prior to that, I have to pass the two entry. Got it? That's all. So give necessary journal entries and company balance sheet after the above this transactions. Got it? So come to solution. So here already I have given. So therefore, no working is required. Directly journal entries. That's it. Working notes is not required. So almost I have shown the working. So as a part of journal entries, let us take this working. That is sufficient. Yeah. Come to journal entries. Start writing in the books of B Company Limited. In the books of B Company Limited. Under that, journal entries. So they have not given any dates. So therefore, directly without dates, let us proceed one 1-on-1. Now, to start with, first is rights issue, my dear friends. Rights issue, that is a subscription. So here they have to pay completely 15 rupees in one shot. So therefore, first entry. This is for existing fresh issue or rights issue, whatever the name you call, at 15 rupees. Entry is bank account debit to equity shareholders account. Under that, show the working. It is nothing but application money for 5,000 shares. Application money for 5,000 shares. How that 5,000? Just show the working. 20,000 into 1/4. 20,000 into 1/4 is equal to 5,000 into 15 rupees. Total 75,000. Next entry. So since whatever here due entry I passed, that is whatever amount is received, now I have to transfer to capital account, equity share capital. Therefore, next entry, equity shareholders account debit to equity share capital account. So instead of that equity share, you can use share application also, nothing wrong. So here equity shareholders account debit 75,000 to equity share capital within bracket 5,000 into 10 rupee. Amount is 50,000 to securities premium within bracket 5,000 into 5 rupees. 5,000 into 5 rupees, 25,000. Yeah. So next is, that's a narration. Being share application money for 5,000 shares has been allotted at a premium of 5 rupee. At a premium of 5 rupees. So now rights issue, that is a subscription of a fresh issue, is over. Now let's go to bonus issue. Now bonus issue, my dear friends, whenever in a bonus issue chapter, I have taught you first is due entry, thereafter capitalization entry. Correct? So like that normally will come. So here for bonus issue, how much we already calculated that in a narration. Let us do it. So for that bonus amount, I'm going to use already securities premium is there, to the extent that I will utilize balance over and above. I'm going to use revenue resource, which is P&L. So entry. Next entry. Securities premium account debit. Securities premium account debit to 25,000. Profit and loss account debit 25,000 to bonus to equity shareholders account 50,000. Bonus to equity shareholders account 50,000. Yeah. So in a narration segment, show the working. So 25,000 shares, that is a 20,000 plus 5,000 within bracket. Like this, you're supposed to show 20,000 plus 5,000 is equal to 25,000 into 1/5 is equal to 5,000 shares into face value 10, which is 50,000. So 50,000. So out of this securities premium 25,000. So P&L balance 25,000. So this is what I have used. Yeah. Next entry. So this is for capitalization. Next entry. Bonus to shareholders account debit to equity share capital. Bonus to shareholders account debit to equity share capital. $50,000. Yeah. So now that's all. Bonus is over. Now let's go to part 3, redemption. Part 3. Now, whenever you touch redemption, my dear friends, before you go for redemption starting, so this is part 3 redemption. So that's what we are going to start. But before starting redemption, I have to ensure that DRR supposed to create for 10% and DRI supposed to create for 15%. That should be there. Yeah. So that too I should ensure. So therefore, first entry under this. So creation of DRR entry is P&L account debit to P&L account debit to DRR, debenture redemption reserve account. P&L account. So imagine P&L account we have debited, P&L account debit to debenture redemption reserve account. Yeah, within bracket show the working. So DRR amount is narration. You have to write it in exam in fill. So here I will show the working. So DRR is equal to, so that is 1,20,000 into 10%. 1,20,000 into 10%. So go and check 12,000. 12,000, update the amount. Next entry. So DRR is done. Next is DRRI supposed to be created. Therefore entry. So DRR investment account debit to bank account. DRR investment account debit to bank account. So in a narration segment, show the working same 12,000, sorry, 1,20,000 into 15%. 1,20,000 into 15%. Amount is amount update 18,000. Anyway, this will not come in closing balance sheet because anyway, before, at the time of redemption, I supposed to sell this, my dear friend. I supposed to sell this. So this is just for compliance purpose. So 18,000 over. Correct? So now let's go for starting redemption. So again, now we have to start for redemption. So first I have to sell the DRI. There is a debenture redemption investment I supposed to sell. So whatever entry you passed, same next is reversal entry. Reversal entry, which is bank account debit to debenture redemption reserve investment account, DRR investment account. Yeah. So bank account debit to DRR investment account, same at par 18,000 in the absence of information. Par 18,000. So now investment is created before for compliance, and at the time of redemption I have sold it. That's how. So bank balance will not alter. Now let's go. Next is due entry. I supposed to pass for debentures. So here redeemed at 3% premium. So therefore entry first is due entry. Entry is 12% debentures account debit, face value 1,20,000. 12% debentures account debit 1,20,000. Premium on redemption. Premium on redemption of premium on redemption on debentures account debit. Within bracket show the working 1,20,000 into 3%. Amount is 3,600. Debit to debenture holders account. Debenture holders account 1,23,600. 1,23,600. 1,23,600. Next, immediately payment entry. Debenture holders account debit to bank account. Debenture holders account debit to bank account 1,23,600. 1,23,600. So now payment is over. So now let us go to the whatever the accounts are there that we supposed to close. Number one, whatever premium on redemption is there that we supposed to write off with P&L. Correct? Let us do it. So entry. Next is P&L account debit to premium on redemption. P&L account debit to premium on redemption 3,600. 3,600. So that's all. Premium is written off. Now only account is pending is DRR. So now redemption is completely over. Now DRR account has to be transferred to general reserve. It has to be closed. Next entry. Next entry, debenture redemption reserve account debit to general reserve account. Debenture redemption reserve account debit to general reserve account. Debenture redemption reserve account debit to general reserve account. So amount is 12,000. Amount is 12,000. Yeah. So that's all. After journal entry, start balance sheet. So balance sheet of B Company Limited. So as on. So don't know as on. So date is not given. So just write it as a after completion of transaction. After completion of transactions. Yeah. To start with broad particulars. Note and amount. Note and amount. Now, to start with, part 1 is equity and liability. Equity and liability. Under that, first serial number 1, shareholders fund. Shareholders funds. Under shareholders fund, A, share capital. Note 1. B, reserves and surplus. Note 2. Reserves and surplus. Note 2. Then serial number 2, current liabilities. So there is no non-current liability, therefore directly current liabilities. Current liabilities, under that A, trade payables, no adjustment, directly you can update 1,15,000. No adjustment, only share capital and reserves alone might be altered. So if it is more than one asset is there, property, plant and equipment, through split, otherwise there is no change. Yeah, so that's it. So leave space, then total. Then go to part 2, assets. Under assets, serial number 1, non-current assets. Non-current assets. Under non-current assets, first is A, property, plant and equipment. Property, plant and equipment. So let us property, plant and equipment. So directly you can write, my difference. So here freehold property. So therefore note is not required. So 1,15,000 you can write it directly. So that's it. Next, let's go to serial number 2, current asset. Under current asset, A, inventory. Inventories directly update. So 1,35,000. Then B, trade receivables directly update 75,000. Then C, cash and cash equivalents. So we require to give the note, therefore note number 3. That's all. Total balance sheet should tally. Now let's go to the notes. Note 1, share capital. share capital. So write down. So total, my dear friends, look out. Existing 20 was there. Thereafter, fresh issue was 5,000. So then bonus issue was 5,000. In total, there are 30,000 shares. Correct? So therefore, write it equity share capital. Equity share capital. Have they given authorized capital? Oh yeah. So okay. So authorized share capital. Okay, write it. Equity share capital. Equity share capital. Under that, just write authorized capital. So 30,000 equity shares into 30,000 equity shares of rupees 10 each. 10 each. Outer column 3 lakh. Double underline. Double underline. Next line, issued and paid up capital. Under that again 30,000 shares of rupees 10 each, fully paid up. Fully paid up, amount is 3 lakh. So under this next line, of the above 5,000 shares are issued by way of bonus. By way of bonus. So that's it. Outer column, it is a 3 lakh. Go and update total. Go and update this 3 lakh in your capital. Go and update this in your capital. Next, note number 2, reserves and surplus. Reserves and surplus. Note number 2, reserves and surplus. So in a reserves and surplus, my dear friends, so existing, what you're supposed to write. So there is no capital reserve because capital reserve is not there. So but there is a general reserve, correct? So because DRR what we had, that we have transferred to general reserve. Therefore, you can write general reserve. General reserve. It is transfer of DRR. So outer column 12,000. Next, profit and loss account. So inner column. So existing balance as per your balance sheet is 1,20,000. 1 lakh. Am I? No, my dear friends, I have not stopped. I have not stopped. Okay, now it's back. I haven't stopped, my dear friends. I haven't opened at all. So I'm in a full screen mode of note 1. So I haven't opened at all. Okay, fine. Somehow it happened. So yes. So profit and loss account 1,20,000. So profit and loss account 1,20,000. So out of that, my dear friends, so what we did first, to create a DRR, we have reduced 12,000. Correct? So therefore less DRR creation 12,000 first. Correct? So thereafter what happened for bonus issue, less bonus issue 25,000. Then to write off less premium on redemption 3,600. So balance whatever you get outside. That will come outside. Give me fast. Give me fast. $79,400. 79,400 is a premium. That's a P&L. Yeah. Thank you. Thank you, Surya, Simran, Harsh. Very good. So less utilization for bonus. Issue 25,000 utilized. Therefore, this will come nil. So that's all. So total is 91,400. Take to the balance sheet. Take to the balance sheet. Take to the balance sheet. Next, note number 3, cash and cash equivalents. Cash equivalents. So first take it A, cash in hand. Cash in hand given directly. Take the amount is directly. Take the amount 30,000. Next is B, cash at bank. Show the working. So opening balance 2 lakh plus fresh issue 75,000 minus payment to debenture holders 1,23,600. So net balance is 1,51,400. Therefore, subtotal total for balance sheet is 1,81,400. 1,81,400 and check it out. 1,81,400. Check it out. Thank you, Harsh, for deleting. So balance sheet is tallied. Yes, very good. 5,06,400 is the balance sheet total. Surya is saying that. Surya Siddhant. Even at the last class, just it is about to complete. That is the last but not least the problem. For that also only 2-3 students are responding. Oh, Pavitra also added on. Very nice. Yeah. Come to question number 12. Question number 12. So last problem for the our journey of accounts. Now the summarized balance sheet of Convertible Limited. Very nice name. Unlisted company. Therefore, DRR at 10% will apply. Stop emotions. Emojis, emotions and all, stop it. Still another 1 hour class is there. We have to complete this problem first. And so therefore unlisted company DRR is there, as well as I have to create DRRI at 15% I supposed to create. Now, so they have given share capital 5 lakh. This is share capital 5 lakh, equity shares of rupees 10 each, therefore 50 lakh. General reserve general reserve 90 lakh is there. Profit and loss account 10 lakh is there. DRR 10 lakh is there. Correct? So now just check out my DRR is there. So 13.5% convertible debentures of 1 lakh debentures into 100 lakh. So therefore, can you convert? What is the 10%? 10% is 10 lakh. Therefore, this is correct. 10% is created. Therefore, one target is achieved. That is, they have already created. Next, other loans is there. So face value of debentures is 1 crore. Imagine 100 lakhs. So other loans, current liabilities and provisions are there. Let it be. So fixed asset at cost as depreciation, that is WDV, it is there 1 crore 60 lakh. Debenture redemption reserve investment, very nice, my dear friends. So 100 lakh into 15% is 15 lakh. So therefore this is correct. This is also satisfied. So that means they already complied with the condition. Your job is just redemption. That's all. Just redemption. Now Cash and bank balance. So this is also really, this is, I'm very happy with these figures. Very happy with these figures because this is what I required for this chapter, my dear friend. Rest of the things are just blah, blah, blah. Now, cash and bank balance 75 lakh and other current assets 2 crore is there. Let it be. Find the small balance sheet is tallied here. The debentures are due for redemption on 1st July. 1st July. So what is the date? Here 30th June. 30th June. Immediately it is 1st July 2001. So that means immediate next day. Therefore, there is no interest component in here. Interest component is not there. The terms of issue of debenture provided that they were redeemable at a premium of 5%. So therefore, what is the premium? Premium is 100 into 5. 100 lakh into 5. 100 lakh into 5%, which is 5 lakh is premium. 5 lakh is premium. Keep in mind 5 lakh. And also confirmed and also conferred option to the debenture holders to convert 20% of their holding into equity shares. 20% of holding, 20% of their holding to equity shares at a predetermined price of 15.75. Correct? But what is the face value of share? Face value of share is 10 rupee. Got it? So therefore, 15.5 if it is there, face premium is 5.75 rupee per share if they convert. But conversion, the redemption price of the debentures are 105%. That's show. Now, per share and balance is payment in cash and balance is payment in cash. So 20% they have power to convert. So balance 80%. If you opt, maximum is 20% I will give. So balance 80% I'm going to give you in cash only. Assuming that except 100 shareholders who holds totally 25,000 debentures, that is the numbers out of total, how much is there? Out of 1 lakh, 25,000 debenture holders except, yeah, the rest of them exercise the option of maximum conversion. That is, balance is how much? Balance out of 1 lakh minus 25k, 75,000 share, 75,000 debentures into 20%. That means 15,000 debenture holders, they exercise the shares. They exercise to convert into shares. 15,000 into what is that? 105%. Whatever that 15,000 into 100. This is the face value of debentures into 105%. That is what conversion price. That is what redemption price. Whatever that amount comes divided by 15.75 per share. If I do, then only will get what is the number of shares. Got it? So this is the case. Now, the investments were realized at par. Very nice. Realized, that means whatever here 15 lakh is there, same thing has been realized. So it is realized at par. There is no profit. Then all the transactions are put through without any lag on 1st July. That means same day it has been realized. That's all. Only thing was here, my dear friends, that debenture holders out of 1 lakh, I give an option to convert for 20%. But what happened out of that 25,000 worth of debentures? They said, we will not exercise that at 20%. We want completely in cash. Therefore, for that 25%, I will give 25,000 options, debenture holders I will keep aside, because for them anyway, I'm going to give cash. Correct? So then, for the balance of 75,000, whomsoever is there, so for them, maximum rate is only whomsoever exercise, for them only 20% I will give in shares at 15.75 per share. Correct? So what I did, out of 75,000, I converted what is 20%. So for that 20% debentures, I have to multiply with 105%, because for everyone, whether it is converted into share or if you take cash, so I'm going to give, it is redeemable at premium 5%. Therefore, that is a conversion. So I will convert, I will multiply into 105, whatever amount comes divided by issue price 15.75, I will get what is the number of shares I'm going to allot for on conversion of debenture holders debentures to equity shares. That is one. So balance, except even for the 75,000, 80% plus the 25,000 shareholders, debenture holders who are not opted for conversion, for them both I have to pay in cash. So that's all. So that time after conversion, automatically DRI, debenture redemption reserve investment will not be there, as well as DR or whatever is there, that will be transferred to general reserve. So that is in a balance sheet, general reserve will increase. That's what the things will happen. Now, what they are asking, redraft balance sheet. That's all, my dear friends. They are asking balance sheet. Redraft balance sheet of the company on 1st July 2001 after giving effect to the redemption. Show your calculation in respect of number of equity shares to be allotted and necessary cash payment. Necessary cash payment, that's all. So that is how much number of equity shares we supposed to allot for them, as well as how much cash in cash we supposed to pay. Correct? Then for the balance sheet purpose, how much actually cash balance is there, that if I have sufficient, I can redraft the balance sheet. Only it will affect only general reserves. Capital, because of conversion of shares, share capital will increase, then bank balance might decrease. So that's it. Debentures will not be there, investment will not be there, DRR will be converted into general reserve. That's all. Correct? So that's all, my difference. Come to let's go to working note. First, before we go for balance sheet, let's go for working note. Solution. So question number 11. Question number 11. Question number 11, page number 68. Question number 11. No. Question number 12. Question number 12, page number 69. So first, before we go for, let's go for working notes. Working notes. So first, my dear friends, we require to compute what is calculation of number of shares to be allotted. So because 20% of the shareholders, they are debenture holders, they are opting. That is not complete 1,20%. Out of that 25,000, they said we will not opt. So only on 75% share, 75,000 debenture holders, they will opt for maximum conversion. So therefore, maximum is 20%. Therefore, out of 75, what is the maximum? So out of 105 divided by issue price, what is number of shares we are supposed to calculate first? That's what working note number 1. Working note number 1. So calculation of number of shares to be allotted to debenture holders. To start with, what is total number here? Not amount. I want first is number. So total number of debenture holders. Total number of debentures. So which is 1 lakh. 1 lakh. So less. So number of debentures. Not opted for conversion, which is 25,000. They have given the shareholders who are under debenture holders who are holding 25,000 debentures. So therefore, what is opted for conversion? 75,000 numbers. So therefore, opted for conversion. Correct? So now, so what is maximum number of debentures for conversion, which is 25,000 into 20%, which amounts to 15,000 numbers. 15,000. Correct? So therefore, what is redemption value? Redemption value of debentures converted into shares. So which is 15,000 into 105. 15,000 into 105, which amounts to 15,75,000. 15,75,000. Correct? So what is issue price? What is therefore number of equity shares to be allotted is equal to 15,75,000 shares divided by issue price 15.75 is equal to 1 lakh shares. 1 lakh shares. 1 lakh shares. 1 lakh shares. Correct? Out of this, what is the face value? Value 10. So premium 5.75. 5.75. Yeah. So now let's go. Second is to be working out number 2. Working out number 2. How much is cash to be paid? Therefore, calculation of cash to be paid. Cash to be paid. So now let us go. Total of debentures. Again, total number of debentures, which is 1 lakh. Correct? Out of that less number of debentures opted for conversion, which is 15,000. Therefore, what is number of shares to be paid in cash? Balance 85,000. Correct? Balance number. So therefore, what is redemption value? Redemption value. So in cash, which is 85,000 into 105. 85 into 105, which amounts to 89,25,000. Correct? But in this exercise, my dear friends, for your information, so what is just for your information, note. So total premium on redemption is equal to 100 lakh into 5%, which is 5 lakh. 5 lakh. So this is total. That means in a bank, whenever I go for payment to debenture holders, I'm going to pay 100 plus total payment is 105 lakh. 5 lakh. Now, after this exercise, let us see working on number 3. How much is there in your bank balance? So balance with write it as cash and bank balance. So after redemption. So how much is opening balance? We have already. So balance before redemption. Balance before redemption, which is 75 lakh. Correct? So now, so if I go for redemption, I have to sell investment. Don't forget that. So sale of DRR investment at par. Par means book value. So 15 lakh. Therefore, total I have 90 lakh. Out of that, less payment to debenture holders in cash. It is 89 lakh 25,000. 89 lakh 25,000. Therefore, what is the balance? Balance in bank 75,000. 75,000. So that's all. That's all the working note. So now let's go for our balance sheet. Redraft of balance sheet. Required solution. Balance sheet. So this is what required solution. Required solution. So balance sheet. Just write it as a convertible limited. Convertible limited. convertible limited. So balance sheet as on 1st July 2001. So that's it. So start with normal particulars. Note amount. To start with equity and liability. Equity and liability. Under equity and liability, so first serial number 1, shareholders fund. Shareholders funds. Under that, A, share capital. Note 1. B, reserves and surplus. So since there is a fluctuation in reserves, so we required note number 2. Yeah, so that's all. Cash balance already we have calculated. So all others, I don't think so there is a change, as it is line by line addition. So next, let's go to note number 2. So we have long-term unsecured loans are there. Therefore, non-current liabilities. Under that, A, long-term borrowings. Out of that, unsecured loan. As it is copy. Other loans, debentures are not there, it is redeemed. So therefore other loans as it is copy, 65 lakh in amount, 65 lakh. So then let's go to the serial number 3, current liabilities. Under that, A, short-term provisions. So as it is 1 crore 25 lakh. So that's it, total of liability. Then go for assets. Under assets. So first serial number 1, non-current assets. Under non-current assets, A, property, plant and equipment. So as it is how much? So fixed assets cost is depreciation, they have clearly given, no note is required. So 1 crore 60 lakh as it is. Then 2, current asset. Under current assets, cash and cash equivalents, cash and bank balance. So copy from working note number 3. It is 75,000. Working note number 3, 75,000. Other current assets as it is given, 2 crore. So that's it, your balance sheet should tally. Yeah, so under this come for notes. So note 1, share capital. Is there any authorized capital? Nothing. So share capital. Under that, write down equity share capital. So under that, my dear friends, just write down, look out, in a balance sheet already 5 lakh is there, plus 1 lakh shares in working note number 1 we have issued on conversion. Correct? So don't say it is other than cash. So because for debentures we would have collected cash. On account of that only we are giving shares. So it is as same as it is issued for cash only. Got it? So therefore, it is a total, what number of shares we have is 6 lakh. 6 lakh shares of rupees 10 each. Rupees 10 each fully paid up. 10 each fully paid up. So which amounts to 60 lakh. 60 lakh. So the 6 lakh is nothing but 5 lakh plus 1 lakh on conversion. That's how it is. It has been. So that's it. 60 lakh. Go and copy in your balance sheet. So only note 2 is our important area. Note 2, reserves and surplus. Note 2, reserves and surplus. Note 2, reserves and surplus. Out of that, first is as per book. So whatever, look out, DRR is there, my dear friends. So already existing in your question, general reserve as it is. General reserve, how much is there? General reserve 90 is there. Correct? So general reserve 90 is there. So then what happened? DRR, whatever is 10 lakh is there, on account of redemption, this DRR we would have closed by transferring to general reserve. Correct? So therefore, first one, let us take it as general reserve. General reserve, inner column, existing balance 90 lakh. So now add, transfer from DRR 10 lakh. 10 lakh. So therefore this total 100 lakh will be outer column. Next, B. Do you have securities premium, right? Securities premium in this problem. Securities premium, yes. Securities premium. Securities premium, which is nothing but 1 lakh. 1 lakh shares into rupees 5.75, which is 5,75,000. C. Profit and loss account. Existing balance is, profit and loss account existing balance, how much is there? 10 lakh. Existing balance is 10 lakh. So out of that less premium on redemption total, whether it's a cash or conversion, whatever it might be, premium is total. So this amounts to 5 lakh is minus. So therefore balance 5 lakh has been transferred to balance sheet. 5 lakh. I hope that's it. So that's all total. So in total it is 110 lakh 75,000. Go and copy. Go and copy. So that's it. It is 110 lakh 75,000 and this is 60 lakh.